National Council meeting of ASSOCHAM. Just a couple of points before we start. Those who are not talking can mute their mic. It makes the audio experience good. So when you speak, you can always unmute and speak. So I also take pleasure in welcoming my co-chairs, Anuj Mathur and Mr. Ashish Dahiya, who is taking this responsibility for the first time. And as you know, just to give a little bit of, can we have a small introduction? Is that possible from all the members?
Yeah, this is Manoj Jain from Sriram Life Insurance.
Okay.
Hi, I'm Anuj Mathur from Canara HSBC.
Yeah. Hi, and this is Nandagopal. Previously worked in the ASSOCHAM Council. Now I'm on my own.
Good afternoon, everybody. Sandeep Ghosh from Ernst & Young.
Hi, good afternoon. Mahmood Mansoori from SDFC Argo.
Yashish from Policy Bazaar.
Paritosh from Religare Health Insurance.
Hi, this is Poonam from KPMG.
Hi, this is Ritika from AXA Re, and on behalf of Mr. Ankul Chhavu.
Hi, this is Narendra from RMS ARC Insurance Brokers. Good afternoon, everyone.
Right.
Good afternoon.
This is Yash from Policy Bazaar.
Right.
Good afternoon. This is Nalini Ratnam from LIC.
Hello. One at a time.
I'm Nalini Ratnam from LIC.
Okay.
Abhishek Bondia here, co-founder of Securela Insurance Broker.
Okay. Any more to introduce themselves?
Yes. From LIC.
Okay. Anyone else?
No, Vishakha from India First Life Insurance. Good afternoon.
Okay, good afternoon. Everyone's faces have changed due to lockdowns.
Right. Because we are able to see you.
Yeah.
Especially ladies, you'll not be able to recognize. I'm not able to recognize Vishakha.
But I can recognize you, Manoj.
I don't go to parlor daily or regularly.
Shall we start? I just would like you to mute your mics so that what I speak is audible to every one of you. Friends, the National Council of ASSOCHAM plays a very important role in terms of shaping up the opinion for the insurance sector, both for the insurers and also for the customers who buy products from the insurance industry. And historically, ASSOCHAM has played a very important role in terms of taking some key recommendations to the government, to the regulator, and we have been reasonably successful in putting forth our points of view and getting a few things done also. So last time, after our council meeting, which happened in Delhi, we had our summit in Mumbai in December. This was inaugurated by AIDA Chairman, Mr. Dr. Kuntia. And then recently we had a webinar on the impact of COVID on the insurance industry. So we are all here, virtually, we are starting a new year. So the idea of this meeting is, identify themes. We can identify a couple of themes where we can work on, come out with some valuable inputs for the policy makers. We can make recommendations to AIDA, government, and other important policy makers. We also do a yearly summit wherein we bring important key stakeholders of the insurance industry to discuss on some relevant theme, which we decide a little later. And also, I'm looking for any suggestions from you to make this council more, effective, to play a much more active role in the insurance sector. So I will, the background of this meet, is very well known to all of us. we are still through the COVID effect. The COVID virus is still around us. It's not leaving us anytime soon. And as you know, the virus has caused a serious economic impact on the whole world and also in India. Looking at the insurance sector, if I just very briefly touch on the general insurance side, we have seen drop in business, especially the retail part of general insurance is impacted, especially motor. Virtually the sales have plummeted. So we virtually are getting only renewal premiums, not much new business. The corporate side, there is a little more sanity because the premium rates have gone up in fire. So that has actually helped. It's not that the actual aggregates are going up. We also expect the investment income to take a drop because the stock markets are down and interest rates are going down. So the investment income is going to take a hit. So the profitability of the general insurance industry possibly could be impacted. I'm not sure at this point of time, it could be impacted. The COVID claims are increasing because as we see, every day, almost 10,000 people are getting infected and quite a few are getting hospitalized. So now I think the people are moving to the private hospitals and health insurance in a way covers half the population, including the government health schemes also. So that way, that there is going to be hit on the insurance industry, and the COVID cost of hospitalization is also pretty high and it varies from hospital to hospital. So there's also a little bit of unhappiness among customers because quite a bit of the COVID claims are not payable under the health insurance policies. They are disallowed as per the policy terms and conditions. On the positive side, digital has taken a big leap. We always wanted insurance industry to absorb more and more digital. I think we always do things only only in a crisis. So I think the industry has very nicely adapted itself and has been able to get the renewals, service customers. So reasonably, I think the service aspect has been taken care of. And today, everyone is comfortable with digital platforms. All our meetings are happening. We're not really traveling. So those are positives. Also on the GI side, health insurance is one area where I think there cannot be a better environment for business to pick up. I think today we don't have to go and create an awareness. Everyone knows why health insurance is necessary. It's just necessary for the insurance industry to come out with products, processes to tap that potential which is very much there. On the life side, I'll be very brief. I will leave it to Mr. Anush to cover it. But the fact is, life also has taken a hit in the business. I was seeing some numbers of 30% drop in the first 2 months. The investment income of life insurers will also take a hit. Persistency could also be under pressure. So these are some of the challenges on the life sides. So with this, the virus is going to be with us for some more months. So I think all of us have been very clearly told by everyone to live with the virus. So we need to find our own ways. And country is gradually opening up, and probably in a month's time, it will be economy normal because the country cannot afford to lock itself down. Because the problems of lockdown are much more severe than probably the virus. So this is the background. So with this now, I would request Mr. Anuj Mathur to give his initial comments. Then I will go to Ashish Dahiya for his initial comments. Anuj?
Thank you, sir. Thanks for giving overall perspective. I think it's very important that all of us should stay connected and have these discussions on regular basis because situation is changing on a day-to-day basis, month on month. So I'll give a brief perspective of what's happening in the life insurance. And as you rightly pointed out, there is dip in business. It is quite evident in numbers. But at the same time, I think it's a very short period where we have seen the dip. And my take is that now going forward, numbers will look up definitely this month and going forward, we should see better performance. And from the government side also, I think the first 2 months were very difficult. The lockdown was severe and the movement of people was restricted. But as we are seeing that slowly, so while it has got its own negative implications, but since government has allowed lifting of lockdown selectively, I think the economic activity is happening. And my view is that starting from H2, insurance should see good momentum, particularly life insurance. And when I'm interacting with the people in the industry and I'm interacting with analysts, people are very hopeful that life insurance industry will do well under these circumstances. On a relative basis, I'm saying, when we look at other industries, I think life insurance should do well. Clearly, there's disruption. There's disruption in terms of bank branches not fully functional, people not stepping in. A bigger disruption is also, and I think Yashish alluded to that in the beginning of the conversation, that the medical centers are not fully functional. Customers are very, very hesitant to actually go for medical checkups. So despite logins, and particularly in case of high ticket transactions, conversions are not happening. And one of the reasons is this, that the reinsurers are acting tough, and also the medical centers are not fully functional and customers are reluctant. But I think these problems may continue for maybe another 1 or 2 months, but thereafter we should see some good progress. Persistency also, what we saw in May was a dip, pretty reasonable dip. But thereafter, what we saw in May, that persistency has started improving. And I think it was also linked to the grace period which the regulator gave, wherein 60 days was allowed. So we saw that towards end of May, people came and paid their premiums. And probably I think people also understand that it's very important to continue with the insurance they're having. So we have seen some good recovery in persistency. Digital you covered, sir, and I think digital sales are happening. And it's not just about online business. When we say digital, it's also the digital means which are being used by agents, by corporate agents. So all of that is happening. One recommendation which I have, and I think we can discuss and we can agree how to take it forward. And since, sir, you particularly mentioned that how we can represent to the government, I think life insurance industry and even general and health should represent about reduction in the GST, because this is one thing which is really pinching. And now today, if we see in this environment, offering affordable protection is very, very important. So this matter has been kind of under consideration for almost 2 years, even with IIDA we pursued with along with Life Council. But it's high time that as a relief, and obviously government is giving relief to various sectors. So I think from ASSOCHAM side, once we have discussion today, I think we should try and represent for rationalization of GST, particularly for pure protection, because that's the need of the hour. And also the stamp duty reduction, because that's another big cost, which is kind of ultimately gets passed on. And obviously it is hitting insurance companies also. And even if you look at PMJJBY, which is the government scheme, so while the government has kind of exempted this from the GST, from the service tax, but the stamp duty implication is still there. And it is pretty steep. And unfortunately, the rates have not been revised. But at least this much relaxation we can seek from the government, wherein the stamp duty element can be kind of waived off. So in my view, I think, and I'd like to hear the views of other people also, I think on the fiscal front, we should ask for some kind of tax concessions. That's the need of the hour. And I'm pretty positive. So while there are kind of some kind of, in the last 2 months, we have seen degrowth and all that, but I think future is bright. And it's a matter of few months. And I think the second half year, we should see some good recovery. So that is what I wanted to mention. And I'm keen to listen to the views of others also. Thanks. Thank you.
Thank you, Anuj. I request Yashish to give his initial comments.
Sure, sir. I think the information about both the industry as well as COVID in general is with each one of us. But broadly, the data we are seeing, at least from China, seems that the recovery, when it happens almost completely. And out there it has happened, and most of the places are back to normal behavior. Now, when it happens is obviously a question. At some point, people get used to the fact that COVID is here to stay, and it becomes like another disease that is there from a contact perspective. Physical contact will be challenged. On data, sir, the specific access we have as an I have is largely to the digital side, and on that, what is, while travel insurance has almost totally disappeared, motor insurance initially had gone down by about 15 to 20%, and this was largely on account of, see, in motor there were two kinds of policies, one which were renewed on time and one which had a break in them. the break cases had gone down to 1/3, while the people who used to renew on time had actually grown a bit. But overall, we were seeing about a 15% reduction in motor. That has come back. So now it is as expected, and it is growing from here onwards. I think the take back of the 3-year and 5-year policies in motor is again positive, at least from our standpoint. The health in steady growth. I was mentioning before the meeting started, 128% year-on-year growth, and that too with no additional supply side. I expect that to continue. This could be the year for health. This could be the year where health insurance, at least the digital part, goes. Our internal view is about 5x of last year. By the time this actually picks up, because we expect the demand to not abate there. I think life insurance is the part is going through a very interesting phase. There has been a pickup, but the pickup is largely on account of the imminent price rises and the price rises that have happened. So the customers are worried that the price rises will happen and they'll miss out on the chance to buy term insurance before that happens. So they are increasingly buying. I think it has to be seen whether this demand carries on beyond the price rise, which should be over by early July. On the investment category, one is seeing pretty much things as expected, which is surprising everyone. But the investment area, at least digitally, has not dropped. However, my view looking at the future is, and even in health insurance, people are very worried about liquidity, and so products are critical. And even for the investment category, we need a lot of monthly pay products. I think if the regulator could consider use and file instead of file and use, or whatever the terminology is, that would be really helpful, because this is a time when a lot of innovation is required. And because of product approval being a complicated affair, it takes time for companies to come out with newer innovation on that front. I think so. The biggest issue that one is facing right now is of fulfillment. So issuance rates have dropped, specifically in life. In health, most of it is happening through tele underwriting, etc. But in life, issuance rates have dropped, and this is across companies. And the primary reason for that is the need for the physical medical. We as an industry have to come together to find via media to physical medical, whether it is through video, whether it is through wearables, whether it is through sending test kits to people, which they can use, and kind of reusable test kits or disposable test kits. We just have to work very hard to find a solution there, because people's apprehension to go to a hospital or to a test center in this time, sir, when people are essentially even washing vegetables for 24 hours before having them, imagine them going to a hospital to get a medical test done, and especially the elderly, right? Today morning I had a call from some customer, 72 years old. He says, why do you expect me to go to a hospital, right? So trying to buy a health insurance policy. My question to him was, why didn't you buy it earlier? But anyway, I think that is a big challenge, and we really need to come together. I think we also need to have a lot of clarity on digital approval processes for both document collection, and we need to work together in that as an industry. Insurers, distributors, everybody needs to work together in that, so that essentially remote fulfillment and remote documentation becomes a reality, including eKYC, etc. I think so. The investment side will require some government support from a tax perspective. How it comes is going to be a question I would leave to Anuj sir, as well as some of the others from the life insurance industry. But I do believe the investment side in life insurance does require some special support, specifically given the ATC benefits have been sort of in a way partially deregularized.
So thank you, Ashish. Now I will go to the floor. I mean, if I can use the word again, I think we'll have to change the terminologies also now. Vishaka, are you here? Vishaka?
Very much here, sir.
Yeah, so I would like to hear from you.
Thank you so much. I think it's, I was hearing about Policy Bazaar just this morning also in some other call saying they're doing really well and there's awesome growth there. And I said, okay, let me see some more numbers. I want to see what they're growing on. Is it health? Is it I'm not just here on the call? But yes, the industry is doing bad. I think if you just go a little deeper, dig a little deeper, I'm actually seeing the agency business picking up more substantially than the banker business, and especially PSU banker. I think you'd start seeing the relationships and personal knowledge, which has always been one of the high impact areas for business in life insurance. I think that's playing out all over again. Then there is fear. The point that Anuj mentioned, if there is fear among the individuals, unfortunately, there's fear among the reinsurers too. We, we ended up actually increasing our retention limit multiple times so that we can continue to do business. So we took a call. We've kind of gone ahead without relying on reinsurers because reinsurers are completely unwilling to take on tele-MERs, video MERs, or do anything different, irrespective of the fact that the regulator has now recognized telemedicine and has given authenticity to it. The reinsurers have not done anything, including GIC. I'm not even talking about the foreign reinsurers. So we feel as insurance companies, we really feel very left out. Term is the demand, and term, your average ticket size is about 50 lakhs to 75 lakhs in terms of sum insured. One or two wrong selections and frauds, and it can wipe out the entire business that's come in. So it has been a little tricky space, sir. I don't know what whether we can do something as ASSOCHAM to say that does regulator not have any authority over insurers? I mean, we brought it up in our meeting with the chairman, and the chairman said, and I don't remember who answered, but somebody said that we'll all have to respect the reinsurers' business decisions. Which is great, but how would you think if all life insurance companies decide to stop underwriting term because it's not fitting into the business decisions? So I think I'm seeing a kind of challenge from that perspective. Definitely, sourcing is one because your banks are not fully open. So bank insurance as a channel has always been dependent on face to face and through physical meetings. So that has been a challenge. And then whatever is coming to us, which can happen, is through term. And in term and protection, we're not getting enough support from reinsurers. So it's in a kind of a double bind. That's what it is. COVID covers, we have zero reinsurance, zero experience. I mean, those of us who are pricing it literally are, it's being priced on a wing and a prayer. And I don't see any sophistication behind the way it's being priced. So it has been a very challenging area. You don't know whether to ask your employees to come to work, not come to work, go and solicit, not go and solicit. So it's been a kind of, as I was telling a colleague, we've started redefining courage and saying courage is not, courage is acting to get up, go there and just face it.
So I was reading somewhere that people are now afraid of coming to office. So they're used to sitting at home and they're really worried running a risk in coming to office.
And it's true, sir, because we opened office and within 5 days we had a COVID case in the office. We had to shut it down, fumigate and reopen again. So you just have to get up, and that's the courage I think we need to instill together. And when you convert it into financial terms and then you see reinsurers not supporting and you're wondering where's the courage,
Okay, so these initial comments from Vishaka. Can I go to Sandeep Ghosh for a consultant's view? Sandeep, you're here?
Yeah, I am, sir. Thank you very much. So I think, sir, obviously all of you and the prior speakers have summarized a number of things that the industry is grappling with at the moment. It's one of those classic situations where The crisis presents a huge number of challenges, but also some opportunity. I think the point was made that if ever there was a moment where people would realize the importance of adequate insurance, it is now. It's not just about having insurance, but having adequate insurance. Also, I think we are seeing across sectors, not just insurance, but across sectors, even beyond financial services, that the digital adoption by customers, by distributors alike is ecosystem partners is ratcheting up. Parents are doing various things online today that they wouldn't have done 3 months back. So all of this is indeed happening. But if I just talk about some of the pressing issues in the sector, one, Mr. Srinivasan, it is very clear that a number of the companies operating in life and non-life are facing significant shareholder issues. You see, number of the Indian shareholders are suffering from the financial downturn, and there is a huge question mark on their ability to infuse fresh capital into the companies. This is then further compounded by the fact that once people have digested the mark-to-market losses on their investment books, there is a huge solvency capital issue. And, so you have already, some of the shareholders whose financials are stretched. The insurance company itself has solvency capital issues, and, the investment books have been hurt badly. And it started with ILFS, went on to DHFL, Yes Bank, and then the market meltdown. So, when you look at the MTM losses in some of the companies, they've been fairly significant. So I think just at a corporate level, and I know this is such a controversial topic, and at least today, nobody can accuse me of having any personal bias. I really do believe that this is a moment when the government should look at raising the FDI cap to 74%. It doesn't matter who benefits, who doesn't benefit, because what it does is it's not only about foreign insurers, it is also about certain private equity players who are present in India, but their investments are treated like foreign money. So in the case of, say, Warburg Pincus or KKR or whatever, if they put money, Temasek, if they put money into an insurance company, it is treated as foreign capital, rightly so. So by raising the FDI cap, I can clearly think of at least 10 to 12 insurance companies who will, look to raise capital, either from a foreign party or from a private equity entity based in India. So this is one key thing. I do believe that with certain conditions and caveats, if the regulator gave some relaxation on solvency and some relaxation on expense of management, these are not to be taken as blank checks. It's not about encouraging any kind of financial indiscipline, but for a 6 to 12-month period, or maybe even 18-month period, as the companies manage through this crisis, some leeway and headroom on solvency and on expense of management is surely something that the regulator should consider. I think the other third point I would make is that we did read about
this thing different from the incumbent.
Request others to mute their mic because it's interfering in his talking. Please, Sandeep, go ahead.
Yeah. So the third area is that recognizing the digital adoption that is happening, and going further to just the enablement of Aadhaar authentication, eKYC. I think even the electronic policy bonds is something that shouldn't only be permitted temporarily. It's something that can be allowed for good. I mean, the very fact that you are allowing it for now, save a lot of paper, you will save a lot of cost of companies by allowing electronic policy bonds. Similarly, making sure that the agent examinations, the IC 3334, can be conducted online. And you also have software tools now where visual recognition is possible. So it's not that somebody else is appearing in an online exam on my behalf. There are many ways. The person is taking the exam is actually who he or she says. Across the board, from online exams, from electronic policy bonds, eKYC, and Aadhaar authentication. If you encourage this whole wave of digitization, it will help from a customer perspective, it will help from a cost perspective. So on both angles. The last point I'd make is, again, there are a number of small changes, like, all the life companies talk about the fact that on the discontinued fund, they have to pay 4%. It should be linked to a benchmark rate, because if SBI savings bank rate is now below 4%, how do companies pay 4%? Fundamentally not sustainable. From the non-life perspective, if the government hasn't paid insurance, can that be taken out of solvency calculation? So if an insurance company is owed money from the government, there's also a lot of the non-life CEOs I speak to say that the TP premium hike should be restored. The need for standardization of cost for COVID treatment, I know there is already some movement in that respect, but some of this needs to happen fairly quickly, because it's impacting the customers as well as the companies. So I think overall, from a product pricing, and I think Vishakha's points about reinsurance also sit there. From a product pricing standpoint, also there are a number of things that the regulator can do. So broadly, from the government standpoint, I'd say FDI. From the regulator standpoint, I'd say solvency and expense of management, and then just supporting the move to digitization and the fast tracking of product approvals, both through sandbox as well as use and file. I think these are some of the things that can be done to boost the industry in this difficult period. Back to you, sir.
Okay. So is Mr. Dhingra here? I just saw him, he has disappeared. Okay, Mr. Nandagopal, welcome back.
Yeah, Mr. Srinivasan, how are you? After a long time.
So you have, as now, somebody who is now slightly out of the industry, your views.
Well, I was actually not out of the industry. I was doing some interesting work anyway, but yes, out of the meetings anyway. See, I looked at this as a perhaps slightly different thing, that, the insurance industry has got a huge responsibility to respond to the fundamental pain that is being caused to the economic situation of the country, especially for the people in the MSME, the business interruption losses, the COVID covers, or maybe the kind of things which are otherwise not insurable. As Vishaka has mentioned, that, the reinsurance support is nil. But we have seen in various parts of the world, I was doing some research, and perhaps I'll share that paper with you. And it is possible for the insurance industry to respond to that in a situation where perhaps we'll become the heroes of the whole BFSI segment. For example, like currently the government is giving so much of support through the liquidity availability to the banks, but the fact is that no MSME or nobody else is actually able to get that loan, because it's not the loan what they wanted. On the other hand, they're all saying that, okay, my business has been shut down for 3 months, 2 months, and my normal business interruption cover is not covering that. What could I do? And of course, there is no answer, because in all the other business interruption covers, we have already put the condition after the SARS Hong Kong issue has happened. Most of the covers will actually have this as an exclusion. And okay, what has happened is happened, but going forward, can we really have an extraordinarily different kind of thought process, where perhaps it is a public, private, and government participation? The insurance industry can lead that in setting up some sort of a catastrophic pools. And those catastrophic pools can actually put in some kind of a money which can be collected from all those people who are otherwise not impacted in the good times. And then that can be given as an umbrella cover for people. And this is something that, an opportunity only insurance industry can understand. Banks will not be able to understand, because insurance companies' basic job is to understand the risk at all times. And some risks are not insurable, some risks are insurable in a different condition. But if you add the government's umbrella of support, you add our domain knowledge of, calculating and measuring the risk, then I think we have a great opportunity to create a sort of a structure which will handle this kind of a problems in future. That's my view.
Right. Okay. Mr. Dhingra, are you here?
Okay. Yes, sir. I'm very much here, sir.
Yeah. So, how are the intermediaries doing?
So that's a very interesting question. I think, frankly, the way I look at it is, I think the battle is mainly a mental one. I think people are buying insurance. I think at least on commercial lines, people are renewing their insurance. I think even in the retail segment, people are renewing their insurance. So I think it's about finding new ways to do business. It's about reorganizing your teams, resetting your priorities. And I frankly think, sir, if you look at, if you think mentally that I'm playing a market share game, then the state of the market doesn't matter. I think it's really how you are positioning your competitive advantage vis-a-vis that of the rest of the market. And if you're offering a differentiated a package of services and solutions, then I think it is possible to grow even in these times. I've been interacting a lot with various insurance company people, and there are many people who've already made up their mind that we are in such times, and people will not buy and people will not shift. And then there are others who are, I think, mentally stronger, and they're very determined. And I can tell you some insurance companies, on the retail side, for example, who are growing at 250% growth compared to last year, same year, for new business.
Okay.
So I think this is the time for leadership. I think our industry needs strong leadership. I think there's a lot of opportunity. I have seen PSUs also react in very positive ways. We have had large settled completely digitally by
okay.
The claim committees meeting on email, giving approvals on email, and actually payments being made to clients of very, very large sums of money. We have started seeing claims by PSUs being settled electronically. But again, this doesn't happen for everyone. It depends on the push you do, the way you liaise, your ability to give documents in a particular way to PSUs. My strong belief is good leadership will result in immense transformation because there are a lot of lessons. We are clearly seeing, from our side, that there is absolutely no productivity drop, but in many cases, productivity increase from work from home.
Okay.
In the past, if we wanted to have a meeting with 10 or 15 people, it was next to impossible with people traveling, to get people together. Today on Microsoft Teams or on Zoom, you can assemble 15 people in 10 minutes. And you are able to do things very crispy. And for example, my company, we had this technology for 2 years prior, but we were never able to use it in the way we are able to use it now. So I actually think that there is a tremendous positives that can come out of it. I think leadership is a differentiator, and I think mental strength is a differentiator, and I think that's where the opportunity lies for the industry.
Mr. Dhingra, I just wanted to ask you one thing: is there a demand for pandemic covers from customers, and how is the industry responding to that? Especially in the corporate side, of course, retail health does provide that cover.
So, sir, I'll address it in a couple of ways. So let's talk about on the health side to begin with.
Right.
So on the health side, for example, there is a lot of demand for increase in voluntary programs where people can buy individual top-ups and individual top-ups of higher sum insureds. Definitely, there are companies who are laying off people, and there are companies from retirement perspective. Definitely, there's a lot of interest in portability and high quality of portability. Seamless without troubling, the individual or having too many waiting periods. And of course, in this environment, you can't do too much underwriting. There is significant increase in purchase of corporate buffer. Right. And especially to tackle this, some clients have bought COVID policies. So, for example, I remember, I think within 3 or 4 days, we bought a COVID policy for all our employees of 5 lakh sum insured. So I think some companies, depending on their approach, they have taken different steps. On the commercial side, my personal view, sir, is that this is like, various parametric covers for loss of wind and loss of sun, that the renewable energy, everybody examines this. When you look at the premium rate at 1.5%, 2% of turnover, ultimately we feel that people, so we look at these proposals, but ultimately people don't buy. That's my experience. they would like to understand, but I think at the end of the day, they don't actually invest. And I would further say that even if I look at the current business interruption covers, even arising from property damage, I think there is significant underinsurance and improper insurance already in the Indian market. So I think that itself has a journey to travel. Before you see clients properly covering those risks, which are already present at a greater frequency and a greater severity.
Okay. So can I ask Nirupama to, LIC is the market leader. So how are they facing the situation? Nirupama, are you there?
Yeah, I'm very much.
Yeah. So just would like to hear you when you joined.
Yeah. The concentration at LIC is, of course, to say that the is together. As far as the distribution channel, as well as the client base. So the concentration is obviously on collection of the premium and all sorts of digitalization and the various methods being used. And that itself is also a way to keeping the force, what we call the field force or the agency force, with us active and ready to move in when the heightened consciousness about insurance gets translated into open wallets, which I believe is going to take a bit of a time coming. Once that consolidation happens in terms of, as another speaker said, right now there is always this trepidation whether we want to open the offices also or not. The moment you open, yes, there is a case or two, and that sets back a whole lot of sentiment. Concentration right now is, and LIC is doing very, very well. We are already managing to get about 70% of the premium that we should have been collecting over the period of time, and the collection per day collection is also in index here, is also going up on an everyday basis. And on the other hand, the concentration on ensuring that the claims, wherever at least not complicated documentation is required, are pushed through. So that being the sentiment right now, we are preparing and keeping ready when the openness in the entire setup comes in. Yeah, over to you, sir.
Okay, thank you. So anybody else would like to give their views? Just opening it up.
Just want to share a couple of things. Although Vishakha and Anuj have already spoken on life insurance. As Vishakha rightly said, bank assurance is one which is hitting. Although we don't have bank assurance, but we do have large NBFCs in-house who give almost 50% of business comes from them. And that has taken a big hit because their main business itself is not, is under severe pressure. But on agency side, April was, yes, some 40% down, but May, somehow we could recover that. So whatever we did last year, May, maybe some 5-10% drop. Maybe one advantage which we have as a company, that a large or 80-90% of branches are in tier 3 and tier 4 town, and mostly those are in green area. So from that angle, that suffering is not there that much. And renewal was taken a hit, but now in May we had shown growth on renewal over last year. And I think Sandeep had talked on digitalization. We were struggling from long, but the kind of resilience even these rural agents have shown, that almost like we do around 30,000 policies per month, 70,000 retail policies, 50% retail policies now coming completely digitalized. So the app is there with the agent, he's loading it. So we have to really see the lot of support staff in the company. Whether how many of them will become little, because since the agent is doing now almost everything, loading it. So that is one challenge we have to see, because each of the branches are having 1 or 2 support staff. And if 70%, 80% is coming through digital, so that is one challenge. And I fully agree with Sandeep, the issue with the regulator on expense of management, and the other point which he mentioned. So that's from my side.
Okay. So there are quite a few suggestions or recommendations. I mean, all of them are very valid. Some of them have been taken up in the past, but the government or the regulator were not very open at that point of time. But I think the timing now is much more conducive because the government has been quite liberal to many sectors. I mean, insurance sector hasn't got much. I think we really need to, like the one Anuj was saying, the GST reduction, especially in health and life, where people are personally impacted. We want these line businesses to grow. Why are we imposing such a high GST on them? Is a very valid point. So these suggestions I've noted down. Probably, we can always we will take it up with both the regulator as well as the government in a proper way. I just wanted to ask, every year we select some couple of topics on which we do much more detailed work. So just want to know whether anybody can suggest some topics on which, some of us can work, come out with some detailed paper for the policy makers. This is one of the roles ASSOCHAM has been playing. I know Vishaka has been doing that year after year and others. So is there any suggestions?
I think GST is one very important aspect. Only thing is that if all stakeholders in the industry and a big lobbying also, if the promoters can do a lobbying to the finance ministry, because this GST we are talking from last 2 years, but nothing is happening. And I think one side where we really suffer, that our lobbying at the ministry level. See, we are all operating CEOs, so we have our plates full for operating work. This is one thing which which should be taken as a different level for an industry. So GST is one big thing which we can.
Yeah. See, in the past, the councils have taken it up very seriously. I know even IRDA, in informal capacity, has told the government. But those days, the revenue concentrations were very high. They felt, the insurance industry gives quite an amount of GST to the government. So they were not very keen to reduce that. But now the atmosphere is different. I think we have to try at all levels. I mean, we have to try through our promoters. Our promoters have so many priorities. So we have to make them put insurance GST on top of the priorities. So if something is more important for them, they will more focus on that rather than on this. So I think it has to be tried at all levels.
Sir, on that, my submission would be that in a situation where the government is also grappling on the revenue front, if we go for a across the board GST reduction, it's probably unlikely to find favor. There may be merit in simply restricting the GST reduction asked to health insurance covers and maybe term life, because as you can probably appreciate, sir, where is the government going to fund reduction in GST or any other form of taxation in an environment where they're having to actually pump money and support various sectors? So I think that we might need to calibrate that, and that would be my thought. So
I agree with that. I mean, I'm talking basically of these two lines of business, health and life, probably term life, or I don't know, we can discuss on that.
Protection, I think term life we can focus on initially because that is where the maximum blood comes.
Yeah.
So we can focus on health insurance also. If the government is not relenting, at least we can ask government to give some concession on reduction of GST or waiver of GST for senior citizens who are buying health insurance. At least that can be a beginning.
Yeah, we always pitch our demands very high and then gradually come down. Go only for senior citizens, then they will throw us out.
With your permission, may I add 2-3 more points, sir?
Please. Yeah.
So my submission was, can ASSOCHAM look at revisiting the commercial line, general insurance commercial lines, product and product wordings?
Okay.
De-tariffing has happened now, and we are come back to a backdoor entry of tariff also. But still the product wording remain the same. There's not much change that has happened. Recently, GI Council had come out with one note on the property all risk cover for the Indian market. And few of the intermediary members, including us, did submit our views on that. But then nothing has happened on that. It's high time that we look at revisiting this thing. Second,
Okay.
from the distributor and GI insurance penetration perspective, we see that there is a lot of no insurance or under insurance in the SME and MSME sector. And MSME sector is also given a lot of debt and other financial support by various financial institutions, including your regular nationalized banks. So can we come out with a prescriptive guideline that if an SME or MSME is taking, although Banca is doing work on this, but this will definitely help in penetration, and we prescribe a bundled product that can be given to that SME and MSME enterprise purely from the protection perspective, and also inbuilt a business interruption cover in that. That will really help in a large way to increase penetration in the GI sector, especially in the small and MSME, micro, small, medium enterprise things. Third point, I would like to, our IBAI call with IRDA chairman on May 19, I mentioned that to Honorable Chairman also. I want to just check whether ASSOCHAM can look. The public liability insurance, this is purely with the Visakhapatnam gas leak issue. The public liability insurance policy is archaic, sir. The indemnity limits are meager. It will not help any beneficiary in any way. So can the indemnity limits, because the act only policy, can we give a representation to government to revise to some reasonable or decent indemnity limits over there? That's the thing, sir. And one more of course, many insurers in this panel, I don't see any general insurer in this planet. There needs to be some, Sandeep Ghosh did mention about the management expense or expenses for the insurance companies. But if you see in the GI market today, recently IRDA has penalized Future General Insurance Company 1 crore rupees because of certain practices in the distribution market. And that is purely, on one hand, we are expecting regulator to increase third-party premium year on year. But on certain motor third-party premium segment, there is a huge cashback that is happening in the market. And the private sector insurance companies are indulging in this day in and day out mercilessly. They go through agency vertical, they probably go with some other intermediary vertical also. So this is one, if there is such a huge cashback going to the customer, then why do you need such high premium? You might as well reduce the premium itself. This is spoiling the market, sir. This is not a healthy thing. Because A is going to indulge in a practice, then B, C, E, F, G, everybody indulge in the practice. Because ultimately everybody wants top line and bottom line growth.
Right. I can understand, Barinwal, your concern. I think it's a concern of everyone. There are some problems for which solutions are not coming so easily. Yes, certainly I agree with you, but I think we need to try. I agree with you. We need to keep trying so that market conduct issues get resolved and the insurance industry gains in respect. Some reasons why insurance industry is not high in respect, the public eye is because of the market conduct issues. Certainly, let's keep trying. So, I was looking for some topics on which we can work.
Sir, I have two. One is development oriented, one is problem oriented. Development oriented, sir, I think if we can put together a paper on what all we require, if anything is missing from a regulatory perspective in remote fulfillment,
right,
or anything that requires regulatory support from a remote fulfillment perspective, I think we should work on that, because it's high time remote servicing and remote claims management became a priority. I think it's a reset button for the entire industry. And a lot of, I think if we delve down, it will be too much detail to go through in one call. If we delve down, there will be things which would be having regulatory or some kind of reasons why they cannot happen. And I think we could focus on, just put a paper on that. I think the second one, controversial, see, we have an expense of management, but still we also have remuneration guidelines and this, that, and the other. And it causes a lot of complication for almost, for 80% of insurers and for any large distributor as well. It prevents large distributors from going public. It also is a complication for insurers. The only thing is, in the insurers, it's coming in the expense side. In the cost side, whereas for the distributors come in the revenue side, which is even worse from a IPO perspective. I think this problem is unnecessary at some level. It's not helping anyone because whoever has to pay eventually finds a way to pay, and that way is then people will keep checking that way for the next 5 years. So I think if the regulator can just say, okay, we've got expense of management, as long as the company is within expense of management, or the total cost is within that expense of management, we don't need to have this double check of what is actually paid to a distributor, because the distributor will get paid basis their quality of business and basis the profitability of that business. No insurer is here to make a unnecessary loss, and specifically more than the expense of management.
Okay. Any other
suggestions? Yeah, if I may suggest two topics for a paper. This is Abhishek here. One, several members spoke about digitization. Now, if you look at digitization, you have, though we spoke a lot about pre-policy issuance and policy issuance, there are a lot of aspects about post-policy issuance as well, including survey appointment. Pawan spoke about documentation submission. So if you think about digitization as one full theme across the value chain, right from proposal form, underwriting to claims, I think that could be a great report to build on. Second thing perhaps could be parametric products. Again, we spoke about lack of wind or lack of solar, but if you think about the current situation, today, even a natural catastrophe claim like Amphan cyclone would take months and years for someone to get a claim payment. And when you speak to reinsurers and insurers, their biggest challenge to price the risk is about lack of reference data. Right? And there could be a very good report sitting out there on how do you have a mechanism to build the data. And as an industry body, if you are able to put together something neutral, right, which insurers could refer to, then something like earthquake or a flood could in fact be sachet for NatCat products, right from MSMEs to large corporates. That could also be one area to which.
Thank you, Abhishek. Yeah. So, any other suggestions?
So again, I'm not sure whether this is worthy of an entire paper, but I think given that the whole world is dealing with this once in 100-year pandemic, there are probably some very good practices that global insurers, that global regulators are adopting as we deal through this. In fact, just purely in terms of, let's say, product innovation, let's say in terms of how do you flex some of the regulations to cope with something which has never been experienced before. How are global, how is this issue of the exclusion of pandemic being treated when small businesses are claiming in Germany, France, US, UK? So one area could be a benchmarking of what is it that we can, what is it happening globally? And it doesn't mean that all that is happening is the best, but at least bringing that level of awareness to the industry, to the regulator and other ecosystem players of how different countries are adapting, evolving their products, their processes, and their regulatory positions in dealing through this pandemic. So this is a dynamic topic. It's evolving every day, but we could certainly look at 5, 6 more developed markets and study that and present that for the benefit of the industry participants as well as the regulator.
Definitely, I think that's a good idea. Yeah.
So, Vishaka here.
Please go ahead.
So my views, and they're fairly kind of consistent over the period of the past few years. When all the reports that have been spoken about by all the speakers are valid reports, these are all industry reports. These are all knowledge reports which are being done. I do believe that there is sustainable change that is required in the industry, and I do believe we should get the voice of customer, and that's always been something that I have requested from ASSOCHAM is using the resources, using the contacts, try and get surveys, try and understand what is the change that we can bring about on the basis of what customers want and they're looking for. What insurance companies want, I think we have it all very clear. We should take it up through ASSOCHAM with the regulator. But if you're looking at it from reports perspective, I think we should try and see how has this COVID-19 impacted individual customers and their outlook towards insurance, and what is their expectation. We will, I think, as insurance companies, we will keep evolving. And I know I have, plenty of people on this call itself who will be detractors. But at this point in time, you compare a debt mutual fund and you compare a non-par product, and you actually feel if there's a product maturing right now, maybe the par and non-par actually did not have an erosion of capital. I know we're not going to have similar views on this, but I would be keen to know what are customers' views. Is it more about the industry selling a proposition, or is it a customer whose outlook has changed, whose risk appetite is more balanced? I think if we can do some customer insights into how they feel about not just risks on mortality and morbidity, but also in terms of finance. What are the risks that they're willing to take in terms of finance?
Okay. Thank you. I think time, especially for me, time is running out. So a lot of ideas. So I've noted down all of them. Then we will come back to you. I will discuss with the co-chairs and then come back. Recommendations we'll make to IRDA and the government, and also the topics we will work. Of course, I'll come back to you later to some of you to lead those. Intellectual talent comes from you. So, and then, we'll work on them, and whatever support is needed, ASSOCHAM with their bandwidth should be able to support these papers. So, we come out with something very useful to the market and industry. So, Anuj, Ashish, can we, any closing remarks from both of you?
So I think a good discussion, and my suggestion would be that once we have compiled this, let's come up with maybe one or two themes for representing the government, and one or two themes for coming up with a report. Because if we try to club too many things, then also it may not happen. So that's my request. And overall, I think very good discussion, and I would like to thank all the participants for the valuable contributions. So that's it from my side.
Thank you, sir. Totally echo Anuj sir's view as well. Thanks everybody for participating. And I think we should limit the total number of asks we have from the government or regulator to maybe 2 or 3 at most. But thanks.
Thank you. Thank you for participating in this.
Thank you very much.
Thank you. Bye-bye.
Thank you.
Thank you.
Thank you.
Thank you, sir.
Thank you, sir.